Good morning, everybody. Welcome to the panel on workers' compensation, and welcome to the Texas Public Policy Foundation's policy orientation for the Texas Legislature. My name is Bill Peacock. I'm the Vice President of Research and the Director for our Center of Economic Freedom at the Texas Public Policy Foundation. So we're just glad to have you all here today. We're excited to have this topic and talk about workers' compensation. You know, right now, at the forefront of the national discussion today is the issue of health care, how we're going to deal with health care in this country. And the Senate just voted yesterday on dealing with all this, but something that a lot of people don't think about when it comes to health care, or they don't really even realize sometimes, is that there's an entirely different system set up for dealing with workers who are injured on the job. Right? And this isn't getting as much national press as attention, but it's a very important issue for particularly if you're an injured worker or if you're an employer who's trying to take care of your workers. And so that's what we're going to talk about today. You know, workers' compensation sprung up in the early 20th century. It was part of what is known as today is called the grand bargain, where the uncertainty of injured workers getting the care that they or the compensation that they wanted was replaced with certainty through state-run or state-managed and regulated workers' compensation systems. But out of the thing that was taken out of the system was that workers couldn't necessarily get full compensation through lawsuits and those kind of things that they felt they might be entitled to. That was the grand bargain that was put into place. So today we have a system in all 50 states where most employees are covered by workers' compensation. And as you would expect from government-run or managed systems, the results of those are varied all over the country. Some systems like Texas work very well. Other systems don't work so well. And employers and workers are not in the best shape in a lot of those states. As I mentioned, Texas is one of the better states when it comes to that. Part of that, of course, is to Commissioner Brannon and his good work and his staff's good work over there. But part of it's also due to the fact that Texas, unlike every other state, doesn't require workers or employers or workers to be in the workers' compensation system. It's mandatory in all 49 other states for most employers to be in the workers' compensation system, but that's not the case in Texas. And so what is developed in Texas is because there are employers who don't want to be in the system but still want to take good care of their workers, we've really developed a vibrant, healthy system of dealing with helping out injured workers. It's called the Texas system of non-subscription, for lack of a better term, because employers are not subscribing, if you will, to the workers' compensation system. The Texas Public Policy Foundation is engaged in research right now. We'll be publishing a paper shortly on this issue. And as we've looked at this, one of the things we've seen is that the results of the Texas system are that it's less expensive for employers, but it also provides better outcome for injured workers. They return to work more quickly. They get back on the job, earning money again, and it's really works out well for everybody. It's worked out so well here in Texas that some have wanted to export this system to other states and take advantage of the efficiencies and the design that we have here in Texas so that we can bring the benefits to workers and employers in other states. But not everybody's has been excited about that effort. For instance, the Department of Labor launched, you might call it a jihad even, against the Texas system we have here, and really against just state-controlled workers' compensation in general. I mean, it seemed to be the mood was, let's let the federal government take over workers' comp like they've taken over the rest of the healthcare system. And so that's really what we're here to discuss today. talk about the workers' compensation system here in Texas, how it's working out, the system of non-subscription, how those two interact and how they benefit each other, and whether or not we might want to take this system and export it to other states. So to help us get started on this is we're going to have first up today Commissioner Ryan Brannon. Commissioner Brannon he's the Workers' Compensation Commissioner here in Texas. Before his appointment to this position, he served as a policy advisor to Governor Rick Perry, where he provided strategic and operational advice to the governor and helped work through the legislative process. Commissioner Brannon serves on the board of the Texas Workers' Compensation Self-Insured Guarantee Association. Try saying that twice real fast. He's also the vice president and executive committee member of the Southern Association of Workers' Compensation Administrators. And he received a BA and an MBA from the Southern Methodist University and a law degree from the University of Oklahoma. But perhaps his most important achievement in his career was he spent about 3 years as a policy analyst at the Texas Public Policy Foundation. So please join me in welcoming Commissioner Ryan Brannon.
Good morning. Thank you, Bill Peacock, for that introduction. It's a pleasure to be back here at TPPF, actually. I was just commenting that my very first session in Austin working in government was here, stuffing envelopes, handing out name tags, and moving boxes and taking people to and from the airport at this policy orientation. So it's kind of interesting to be back here speaking at it. So thank you, Bill, for the introduction and for the great segue you gave me into the world of government, particularly down here. And I do appreciate you saying that the good work that me and the staff are doing at the division. We really are doing a great job, but a lot of the heavy lifting was done in the 2005 legislature, where they did a lot of changes. The leadership of then Senator Todd Staples and others who passed the legislation that gave us the reforms. And now that we are kind of the model for workers' compensation in the other states, other state commissioners are talking to me about the successes we've had in Texas and whether or not it would actually work there and all the problems that they're having in their states. And I constantly use the analogy of getting handed the keys to a Ferrari and being asked to open it up on the Autobahn. And that's the system that I was inherited. So while we do have problems, they're first world problems compared to other states. So I'm just going to get started by talking about the state of the workers' compensation system in general, kind of how we're set up and some of the numbers, and then kind of head into what we call non-subscription, which is the opt-in, opt-out debate that's going on nationwide. So bear with me here as we kind of set the stage for the hopefully fun debate that we're about to have. But as many of you know, Texas has always had a unique workers' compensation system, one that allows for businesses to make decisions which best fit their company. This system has worked well in Texas for over 100 years now, and many of you may also know that my priorities have been continuing that tradition as the commissioner, and I hope that you've been able to see the results that we've been put into action basically before I got there and since I've been there. We've been a model for many states, and we're going to keep improving and keep moving forward. Normally I get into a lot of specifics about what it is that we're working on and what we're doing to improve the efficiencies and transparency measures at the agency, but in the instance of trying to get into the breadth of this particular discussion, I'll skip that, but I'll be around afterwards if you want to talk about some of those specific measures. So regarding the system as a whole in Texas, I'm happy to report that our insurance market is healthy, competitive, and profitable. And as many of you know, to the chagrin of some folks here, we're still the only state that lets employers opt out of providing workers' compensation coverage. Though it's worth noting that only about 5% of Texas full-time private sector employees don't have some type of workers' compensation coverage. Here's a quick look at what else is going on in the Texas workers' comp system. The most recent numbers show that in 2015, 290 insurance companies had positive direct written premium, and total direct written premium was about $2.74 billion, which is about a 3.5 decrease percent from 2014. This reduction in total direct written premium is primarily due to insurance rate reductions coupled with payroll changes as a result of the less oil and gas productivity. The top 10 insurance company groups write about 80% of the market, and the top writer Texas Mutual, wrote about 40% of the market from the first quarter of 2014 to the first quarter of 2015. In total, there are about 220,000 policies written in 2015 in Texas. Premium rates are one of the primary factors used by an employer in deciding whether to become a non-subscriber or not, and since the 2005 reforms, workers' compensation insurance rates for Texas employers have declined by nearly 56%, making it more affordable to provide workers' compensation coverage. In fact, a study that was recently released has Texas improving from the 36th highest premium rates in the country to the 40th most expensive premium rates, basically flipping and becoming one of the cheapest for employers in the nation. Compared to other large states, it's even more impressive, as New York had the 3rd highest and Illinois had the 8th highest. At the same time, workers' compensation insurance in Texas has been profitable for insurance companies. Based on their combined ratios, insurance companies made about a 20% underwriting profit, not including return on investments. Injury rates and the number of claims filed have been declining since the reforms, which is good news for everyone involved in the system. Non-fatal occupational injury rates have declined 233% since 2005. Fewer on-the-job injuries means safer workplaces for Texas employees and lower costs for Texas employers. The number of workers' compensation claims filed has also declined at a rate of 28% since 2004. If you think about those numbers for a minute, it's actually really impressive for a state that prides itself on its oil and gas, construction, and ability to grow. Overall, medical costs have stabilized from the double-digit increase rates experienced in the early 2000s. Adjusted for inflation, current total costs are down 31% since 2000. In nominal dollars, the combined total professional and hospital cost is unchanged from the cost level in 2000. The reforms under House Bill 2600 in 2001 and the big ones in House Bill 7 in 2005 helped stall some of the previous increases, particularly by controlling high per-claim utilization rates. Changes in cost trends occurred primarily between 2002 and 2008, coinciding with changes in the 2003 professional services fee guideline, reduced utilization levels, and declining numbers of claims. Per-claim costs have also decreased for pharmacy and professional services. However, while per-claim costs for hospital services decreased slightly in 2013, it was 23% higher than in 2000. More recent decreases in pharmacy utilization and costs, particularly for what we call not recommended or N drugs, occurred after the implementation of the 2011 pharmacy closed formulary. So the formulary, and I'll get into more detail on that in a minute, but that's one of the areas where Texas is leading the nation and other states are looking to adopt. And so while we're mentioning that formulary, as you may know, we were one of the first states to adopt it, and adopting that in 2011, and then for new claims, and then 2013 for old claims. And since that's been implemented, we've seen tremendous improvements in overall costs and effectiveness to the system. We've seen a 67% reduction in claims with those N drugs, a 78% reduction in N drug costs, a 15% reduction in total pharmacy costs, a 77% reduction in prescriptions for the N drugs. We've seen an increased use of generic drugs, significant reductions in opioid use, and no indication that N drugs are being submitted for other types of drugs or for physical medicine services. So we're very proud to say that other states are looking at our model, as Texas is once again the innovator in the administration of workers' compensation benefits. Several states have already adopted or are considering the Texas-like formulary. Oklahoma implemented a formulary after seeing the experiences we had in Texas, and California and Tennessee have already passed bills mandating the adoption of a formulary. Other states, including Florida and Georgia, are not far behind. And in addition to the formulary, states are also looking at incorporating other components of the Texas reforms into their own systems, including e-billing requirements, Medicare-based medical fee guidelines, evidence-based treatment guidelines, and of course, our non-subscription system, Oklahoma being the primary option so far. So to get into the non-subscription aspect of the system and where we are there, and that's even without a mandatory requirement for private employers to provide workers' compensation coverage, about 78% of private Texas employers now have workers' compensation coverage, which is up from 67% last year, primarily due to the declining costs in premium. This is an instant point to remember that 78% of all private employers now have workers' compensation coverage. Keep in mind that only 10 years ago, before the reforms, when the workers' compensation system was not doing well in Texas, our system had a 45% non-subscription rate. So 45% of the employers did not have workers' compensation coverage. Not only are more employers subscribing to the workers' compensation system, but more than 75% of the employers in key industries such as construction, manufacturing, mining, and agriculture are subscribers. The Workers' Compensation Research and Evaluation Group is updating employer participation estimates for 2016, and we should have new estimates published here soon. However, preliminary results appear to show a significant increase in subscription rates, which is now, as we know, the 78% as mentioned. So let's review some of the basics and history of non-subscription in Texas to kind of tee up this conversation. Texas has never had a mandatory requirement for private employers to provide workers' compensation coverage, going all the way back to 1913 when the first workers' compensation law was implemented in the state. Employers that do not have workers' compensation coverage are referred to as non-subscribers, and they are not required to offer any type of occupational benefit plan, although many of the larger employers provide benefits through ERISA-type plans. There are benefits, however, to having coverage. Employers that are non-subscribers are subject to tort liability in the case of a work-related injury or fatality and cannot claim certain statutory common law defenses. And employers that have workers' compensation coverage have statutory immunity from most lawsuits unless there is a fatality as a result of gross negligence. As most of you know, this was what we call the grand bargain that was struck over 100 years ago. Now, I want to run down some of the statistics of Texas non-subscribers. We've been monitoring the percentage of private year-round employers that are non-subscribers since 1993. In 93, approximately 44% of employers were non-subscribers, and in 2014, that percentage decreased to 33% and has decreased again. Approximately 78% of those employers now have workers' compensation coverage. Approximately 80% of the private workforce in Texas, that's employees, have workers' compensation coverage. More than 75% of the employees in the key industries, just as I mentioned, have coverage. Smaller employers have the highest non-subscription rates. That's small employers between 1 and 4 employees. But about 19% of the employers with 500 or more employees are also non-subscribers. So the vast majority of the non-subscription population is little employers, about almost 80%, and about just under 20% are the very large employers. Non-subscription rates vary by industry, but the industries with the highest rates include healthcare at 41%, arts and entertainment at 39%, and wholesale and retail trade at 34%. Now, there are several reasons to become a non-subscriber in Texas. According to the 2014 Employer Participation Survey, reasons for non-subscription varied by the size of the employer as to why they chose to be non-subscribers. Large employers state that they are non-subscribers because they are more concerned with the ability to control medical and income replacement costs, as well as claim administration. Small employers state that they are non-subscribers because they have few employees, few injuries, and the fact that it's not required by law, so you have to think that cost becomes a factor for those very small employers. Non-subscribers still have the option of offering some type of benefit plan in Texas. Currently, only about a third of non-subscribers report that they have an occupational benefit plan in Texas, but those of the employers tend to be the larger employers, and they employ about 75% of the non-subscriber workforce in the state. Some of the non-subscribing employers with occupational benefit plans have benefit caps, which limit the money spent on medical and/or wage replacement benefits by set dollar amount per claim or set amount of time, and most of these benefit plans only cover wage replacement benefits in the case of an injury, and about 45% of them cover death benefits in the case of fatality. Now, the idea of non-subscription to some means that there are absolutely no regulations placed on these companies by the state. That is definitely not the case. While the division does not approve employers who opt out of the workers' compensation system, and the division does not regulate non-subscriber occupational benefit plans, non-subscribing employers must still comply with 2 forms of filing requirements administered by the Division of Workers' Comp. The DWC Form 5, which says that all non-subscribing employers must report the fact that they exist and they're out there as a non-subscriber. They have to report this annually. And the Form 7, which says that all injuries must be reported as well. Historically, we haven't had great turnout on those filings by the non-subscribers. But last year, we basically gave a waiver for any company that came into compliance with the Form 5s, and we saw a dramatic increase in the response. And so we're probably going to do another waiver this year and work with private sector to make sure that we can get those numbers up even higher. So we look forward to working with both the subscribers and non-subscribers in the state, and we're very glad to report that the state of workers' compensation in Texas is strong, and look forward to hearing from both sides of this issue coming up. Thanks, Bill.
Thank you very much, Ryan. Our next speaker today is Jennifer Hurlis. Jennifer is the Executive Vice President and Chief Operating Officer with PartnerSource. She consults with human resource and risk management professionals on the design, implementation, and ongoing administration of non-subscriber plans. Jennifer has an attorney with over 18 years of experience and regularly advises clients on their successful claims resolution strategies and ERISA compliance matters. She received her BBA in accounting and a minor in political philosophy from Mercer University and her law degree from the University of Georgia School of Law. Please join me in welcoming Jennifer Hurlis.
All right, we're up. Thank you, Bill, for the invitation and the introduction, and thank you, Commissioner Brannon. I want to start by saying Commissioner Brannon and his team have done a tremendous job improving Texas workers' comp. He and his staff, I've seen this across the country, have the respect of so many different regulators and workers' comp professionals. I actually referred to him earlier this morning as a rock star. And it's impressive. They look to him and what the state of Texas has done as a beacon of what can be accomplished in state workers' comp systems. And we do have an enviable system in Texas. It's the only one in the nation that has a dual system for caring for injured workers, where employers actually have a choice of how they want to manage the injuries of their workers. I think Texas system outshines the other states in part because of the inherent competition that exists with the two sides. Both sides are pushing each other. Both sides are keeping each other honest. Both sides are competing for business. And because of that, there is a culture of innovation and constant quality improvement that exists in this state. So it is true, the non-subscriber community, by comparison, is much smaller than the state regulatory system. But let's put it in perspective, because the non-subscriber community in the state of Texas is actually as large as the individual state comp programs in 21 different states. So it's a big program. It's a system unto itself. So a couple of more facts before we jump in. We've got 1.4 to 1.5 million workers covered by an injury benefit plan. We got over 50,000 claims that are resolved annually each year in this environment. Very little money is spent in state government to oversee it. It's a claim resolution process that's kind of within itself. A lot of premium written and many private sector jobs. This option in Texas has been fully embraced by some of the most prominent brands in American retail, healthcare, manufacturing, transportation, and the industries are continually attracted to this. It's a system that's valued by both the employers and the employees. And in the next 15 minutes, I'm going to show you why. So I want to start with a little bit of history. Bill's done that a little bit. I'm going to take it from a different perspective so you can see how this dual system was created. I want to explain the option, what it really is, what it isn't, the benefit to the most important two stakeholders that we're talking about here today, and that's the employers and the employees, and then end with some data so you can see that I can back this up. So let's start. In 1911, Triangle Shirtwaist Factory. This was one of the most devastating occupational injuries in U.S. history. Nearly 100 people died in very disturbing ways. It occurred at a time when there were no protections, very few protections. There was no SSDI, there was no workers' comp, there was no workplace safety rules. There was very little. And a worker's recourse was limited to the damages that it could recover by pursuing a common law cause of action for negligence. And even that was very hard because of the defenses that were available to those employers. So this occurred at a time when there was very little, and the impact that this catastrophe had on the American workplace was significant. We had child labor laws enacted, fire and safety, women's rights, workplace safety, and the first workers' comp systems in the country were created. So it went kind of like this. This is the grand bargain that everybody talked about. It was optional. It gave employers the choice. If you want to remove the possibility of tort and ensure some stability and some consistency in how you're caring for the injured workers, you can agree to participate in the state workers' comp program, agree to provide the state mandated level of benefits, and in exchange, your employee's exclusive remedy, their only right to recovery, is this workers' comp system. So in exchange, the employees gave up their right to sue. So this was voluntary. After a number of legal battles, these programs began to sweep across the nation. They were working so well that became mandatory until there was only one voluntary program left, the state of Texas. Now fast forward to the 80s when comp costs went crazy. Businesses were looking for any way to stay in business, and they realized, hey, this is a voluntary workers' compensation program. Let's drop it. Let's look for another way to care for the injured workers of our company. And it was during this time that non-subscription was born. Now, modern day non-subscription does not look the same as what it was in the 80s, and industry has developed around this concept. But when we talk about an option, this is really what we're talking about. It's based on the premise that the Texas system is voluntary, so an employer has a choice. You can participate in this system and have exclusive remedy, or you can choose not to and be exposed to the tort claim. You can do this at any time. You can do it on your renewal date. You can pick another date. You can go in and out of this system at will. Now, when you do this, you are exposed to liability. You can be sued by your employees for failing to provide a safe workplace. It's been around since 1913 with the enactment of our labor code. It appeals to primarily industries like retail, healthcare, manufacturing, transportation. Typically, all these businesses, when they do choose an alternative route to care for their injured workers, they do so in the form of an employee benefit plan that is covered under ERISA. Now, these benefit plans can vary in the content. Most of it, we work with about half of the non-subscriber industry, and I can tell you that our clients put in benefit levels that, for the most part, exceed many of the levels that are in the state workers' comp system. But no matter what benefits are put in the plan, they could mirror what's in workers' comp. You're still going to be exposed to the tort liability. So this tort exposure is a design consideration when an employer considers what it is that they want to put in their benefit plan. So here's really what it looks like. This is the choice that you have in Texas. You can subscribe to the system. You can opt out and set up your own injury benefit plan that's covered under ERISA, or you can simply do nothing. Now, I want to distinguish a non-subscriber, a responsible non-subscriber, from this category of doing nothing. Every workers' comp system, even the mandatory systems, are going to have an element of non-covered workers. Workers that are either, because of their situation or because of the business that they work for, are exempt from workers' comp. So every state has non-covered workers. I don't want anybody leaving with the impression that the reason that we have a 4 to 5% of non-covered injured workers in the state of Texas is because of non-subscription. That's simply not true. The rate in Texas of non-covered workers, you heard Commissioner Brannon say, it's about 4 to 5%, and that's comparable to the non-covered injured workers in about 9 other state systems, all of which have mandatory workers' comp. So here's the good stuff. This is really the core principle of a Texas option program. A Texas employer who chooses to opt out of workers' comp doesn't simply do nothing. They utilize a framework that's already built under ERISA. This is a federal law that governs the administration of employee benefit plans. It's the same law that governs the administration of group health plans, 401k plans, and other types of employee benefits that are provided in the workplace, sponsored by employers. So we use this framework of ERISA as the platform to deliver the injury benefits that are designed in the program. So we're using this platform, the same platform that's used to provide group health and 401ks, to injury benefits. Now, on top of this is a tort exposure that encourages a design of a program that cares for the injured workers and encourages a safe workplace. So, stated another way, it keeps the employer honest. You want to design a plan where you're caring for the injured workers. These companies are brand-centric and focused. They want to take care of their employees. And this tort exposure puts the focus back onto the employee of let's do the right thing. So the key components, we're going to talk a little bit more about ERISA and its application in this setting and this tort exposure, this real tort exposure. But there are 4 really key principles that makes an option program work. We've already talked about competition, the inherent competition in a dual system where both sides are having to compete for the business and improve. A key component of a Texas option plan is communication, because these programs simply do not work if you don't have a good, strong communication plan in place with your employees. You have to, under ERISA, communicate what the expectations are and the benefits are. You have to communicate those to the individuals. And in return, the expectation of the non-subscriber employer is that employee is going to communicate back to you. They're going to report their injury timely. They're going to seek treatment timely. They're going to show up for their appointments. And the other thing that surrounds these, that's imperative in these option programs, and what really is attractive to many of these employers, is the accountability principles that are built in. The employer is held accountable. If you don't communicate your program well, you have risk and consequences under ERISA. If you don't design your program to take care of your workers, the tort exposure will take care of that for you. On the employee side, if you don't report your injury timely, seek treatment, participate in your treatment, then there are consequences for that. You can lose your wage replacement benefits, or your claim could be denied. There are consequences to for the providers of following evidence-based treatment methods. All of this, and what really overlays on top of this, is that a non-subscriber program gives employers the tools to be effective employee advocates. They're motivated by the tort exposure, and they're free from some of the complications of the administrative system to really advocate for their employee. And let me give you some examples. My husband was a college athlete, had a horrible ankle injury. We went to the Carroll Clinic in Dallas, Texas, that treats the Cowboys, that treats the Mavericks. He got his ankle reconstruction surgery done there. I have a lady in South Texas who had a horrific ankle fracture, uncontrolled diabetes. And every provider in South Texas, what did they want to do? They wanted to put an external fixator into that foot. That is a recipe for an amputation. The lady was going to lose her foot. So we called the Carroll Clinic. And a non-subscriber has the ability to do that. They're not bound by the workers' comp reimbursement rates. We could pay whatever was necessary to get this lady into the Carroll Clinic, and we did that. She had an amazing result. Those are the types of employee advocacy measures that this option environment affords an employer to be effective advocates for their employees. So I said I was going to talk a little bit about ERISA and what that means. It does have some teeth to it. Despite what opponents say, it's the same federal law that actually put Enron executives in prison. But it does say that if you decide to provide benefits to your employees, they need to be definitely determinable. They can't be vague. You need to specify what it is that you're going to cover and the expectations. You have to put it in writing in the form of a plan document. You have to deliver that document to the workplace. There are claims procedures that you have to follow, and there are fiduciary rules that you have to follow. You have to administer these claims in this plan document in a manner that benefits the claimant and the participants. There are civil and criminal penalties associated with it, and there are some reporting obligations to the Department of Labor. It's got its own dispute resolution mechanism built in. I'll kind of skip that, but the gist is that a claimant gets an appeal, gets a denial letter. It tells them how to appeal. They can write. They can do that with their lawyer. They can do that themselves. It goes to an independent group who makes a decision on that. It can proceed to federal district court if that denial is upheld. There are rights that participants have to their claim information. There's a lot of good stuff in there. ERISA essentially was built on the concept of providing employee protections in the context of employee benefits, making sure that the employers who say they're going to do something in terms of benefits actually do it. Let's talk about the tort exposure, because this is real. There are over 90 or about 96 awards or settlements that are over $1 million. This exposure is real, and it truly serves as a motivation for employers to take care of their workers. There's nothing that motivates an employer more than a jury in Hidalgo County or El Paso. It makes you look at the big picture and do the right thing. I want to talk a little bit about the benefits to the stakeholders, and I really want to make sure I've got some data covered for you. The benefit to the employee is that they are getting oftentimes a higher level of benefit where it's very meaningful in the wage replacement category. Our clients, for the most part, are paying 92. Let's see, in the last 3 years, our clients' average wage replacement reimbursement rate is 92%, compared to what comp provides at 70%. Now, there are tax issues, but that is a real meaningful benefit to workers in the retail and food service industry. We eliminate the waiting period for the most part. Wage replacement starts on the 8th day of disability under workers' comp. These programs oftentimes start on the 1st day of disability. Those are meaningful benefits to employees. They like the inherent ability to sue. They like the safety incentives, and the employers like the flexibility of design and the return of some concept of accountability in this process. And the medical outcomes and the cost savings that are achieved from that. So in terms of data, I want to show a couple of things. The shorter duration of disability benefits. Now, these are looking at lost time claims, so claims over 8 days of lost time. We have a shorter duration of disability, so option employer workers are getting back to the workplace sooner. They've got sustained return to work, meaning that once they return, they stay. 96% stay at work. The average developed claim is significantly less than that of Texas workers' compensation. We think in large part because we're driving injuries to, or treatment of injuries to very qualified physicians. We're spending less on expenses and more on the benefits to the employees. But here's the real kicker, and this is why we clearly have something big going on in Texas. This is a study that was done by a large broker who focused on their national retail experience. And what they found in looking at the state averages, and they included Texas option programs as an individual system component, what they found was that the loss cost, so how much it costs to pay for a work injury claim per $100 of payroll, in the state systems of all other states, it was $1.92 of every $100 of payroll. Look at what it is in Texas. Just over $1. This is very good. And in Texas option claims, we're about 40% of that. So this is clearly, the data supports that we've got something good going on in the state of Texas that others in the country are looking at. We need to be very proud of here in Texas. Thanks.
Thank you very much, Jennifer. Our final speaker today is Bruce Wood. Bruce served for 27 years as with the American Insurance Association, recently retiring as its Vice President and Associate General Counsel. He began his career in the early 1970s as a legislative assistant to then Illinois Congressman John Erlenborn, and he also worked with the House Education and Labor Committee as an assistant labor counsel. In 1988, just prior to his time at arrival at the AIA, he served as an executive assistant to the then chairman of the National Labor Relations Board, James Stevens. He holds a bachelor's degree in political science from George Washington University and a law degree from George Mason University. Please join me in welcoming Bruce Wood.
Thank you, Bill, and good morning, all. It's a real pleasure and honor to be here. I have to, I know I've got time constraint here, but I've got to start with just a little story. I think there's a future for me in Texas, and I say this because my wife, who has a very large extended family, has a major branch of that family who lives throughout Texas. They just up and down I-35, including in the Austin area. And she's told me more than once, when I retire in a few years, I'm going to move to Texas, and you're welcome to join me. So I don't know that I have a real choice. So I at some point in the not too distant future, one way or the other, I guess I'll be here amongst you. And I'm glad to see Bill Minnick here of Partner Source as well. We've been on programs before, and I want to just set a little context for this because I am an unabashed supporter of the state workers' compensation system and the independence of the state workers' compensation system. AIA has opposed opt-out in Oklahoma and other states, and we have some strong policy reasons for doing that, and I'll get into that here. And I really think it's important, and not to minimize at all, Jennifer's presentation of financial results and all of this, that an honest evaluation of whether it's opt-out or literally the Texas non-subscription program of opt-in really should be evaluated looking through an important policy lens. It's not just about a product. Workers' compensation is not just a product. It's a social insurance system over a century old now. It predated Social Security by decades. And, it is, as been mentioned here before, it provides comprehensive coverage for a broad array of workplace injuries, full medical care, no first dollar coverage, no deductibles, copay, and with maybe 2 exceptions in the country, no limitation on duration. And Texas has, of course, been for many years, or since the beginning of time, 1913, right? It's the beginning of time in Texas. Not a requirement. It's always been a non-mandatory state. The narrative surrounding support for a free market, and I've got a couple quotes here. It's time for the work comp industry to abandon this monopolistic approach. Well, that's a pejorative. And to recognize innovative solutions. This type of attack on free markets is nothing new. Texas's alternative to workers' comp is simply one of the many in a long line of successful efforts to reduce government interference in markets that have been repeatedly assailed by federal government and special interests. And Texas has become the nation's economic engine in large part by allowing competition to thrive in markets, even in such unlikely activities as providing benefits to injured workers. So, in considering the relative merit of either non-subscription or of opt-out, it really should be incumbent on policymakers to carefully evaluate the policy implications of a non-mandatory system of work injury compensation. As I said, workers' comp is not simply a product. Charges that the comp system is too expensive or bureaucratic or fraudulent are not policy arguments for an alternative system. Neither can an argument rest merely on a free market without a consideration and looking through the lens of what are some significant policy considerations. An employer who goes bare obtains a policy of alternative benefits that does not mirror the comprehensive coverage mandated by comp, and none of them do, exists outside of a policy framework, divorced from policies designed or a framework designed to promote a safe workplace, internalizing the costs of prospective loss, divorced from data reporting protocols critical to understanding system performance, shifts costs to other private payers or public programs such as Social Security Disability and Medicare. In brief, a non-mandatory system creates an unlevel playing field between subscribers and non-subscribers, and it robs policymakers of the information necessary to measure system performance. Do policymakers not have a legitimate interest in understanding how and to what extent workers injured on the job are being compensated, whether medical treatment is being delivered in a manner that is consistent with best practices, and at what cost, how the system may be promoting or discouraging return to work? In sum, do policymakers not have a legitimate interest in understanding how work-related disability is being managed? Some argue the unfairness of the comp system. The irony is that the comp system is designed to promote equity among employers so as to fairly allocate the prospective risk of loss reflected in rates. Rating plans adopted in all states to which any insurer writing workers' compensation insurance is subject mandate the collection of loss and financial data, the allocation of loss data through uniform classification system, and a further allocation of prospective loss among individual employers through experience rating. Without the benefit of experience rating, what is the social cost of an injury compensation system that does not promote workplace safety as well as accountability among employers to their employees for the costs of injuries and fatalities caused by work? Without full medical coverage, what is the social cost of a system of work injury compensation that fails to provide any, let alone full, medical treatment, resulting in cost shifting to an employer's or an employee's individual health insurance, or to other payers generally through federal and state hospital uncompensated care mandates, or to Medicare or Medicaid? Should Texas taxpayers be on the hook for covering these costs incurred by non-subscribing employers? Is this an equitable result of the free market approach to work injury compensation? What is the social cost of a system of work injury compensation that effectively rewards employers for refusing to assume the costs of protecting its workers, including survivors, from the financial travails of work injury or death by permitting them a cost advantage over their competitor subscribers to the comp system? Is this a defensible result? And what is the social cost of a system of work injury compensation that grants to non-subscribing employers with a plan of alternative benefits the sole right to design a benefit plan, excluding coverage for certain injuries, of exempting itself from a system of uniform dispute adjudication that reposes in the employer full non-reviewable authority over any settlement? A settlement for which an employee wishes to obtain requires him to sign away his right to bring a tort action against the employer through mandatory arbitration agreements. Is this approach reposing in an employer such broad absolute authority a defensible reflection of what the free market should be? So again, it is incumbent on those promoting an alternative system or a non-mandatory system to explain how their approaches are compatible with embedded principles governing work injury compensation, or to reject their merit outright. Doesn't make any difference anymore. What are the fundamental principles underlying the nation's workers' compensation system? And is an alternative system compatible with these principles? What are the essential elements? Well, I count 7, beginning with uniformity. To protect workers and employers, recompense for a work-related injury should be uniform regardless of the employer. Compensation should not vary depending on what plan an employer chooses to provide, assuming they are subscribing with an ERISA-based plan, and from 1 year to the next, and whether the employer is part of the work comp system. Otherwise, employers and employees alike face an unlevel playing field. If weaker worker protections and less generous benefits in opt-out plans make them less costly than workers' comp, they will confer a competitive advantage that many employers will find nearly irresistible. And workers, as a practical matter, will have no choice but to accept what the employer offers. Our present comp system reflects a policy consensus that competition among employers should not determine the level of benefits and the procedures governing recovery for workers injured on the job. Workers should not be at risk of differing terms of compensation from one employer to the next, and employers should not be placed in a position wherein job injury compensation becomes another factor in the competitive marketplace. That same consensus that's existed since the beginning of the comp system does not exist for other employer-funded benefits, such as pensions or health insurance. Secondly, work injury costs should be internalized. No cost shifting to other benefit programs or to public benefit programs and taxpayers. A key comp principle is that workplace injury costs should be internalized. Employers, not taxpayers, should bear the cost of workplace injuries to their employees, and by not covering all injuries and diseases and not guaranteeing unlimited medical treatment, opt-out work injury compensation plans are inconsistent with these principles, and as a result, there's a likelihood of cost shifting to other benefit programs and publicly funded programs such as SSDI, Medicare, and Medicaid. An analysis published last year by another property and casualty trade association, the Property Casualty Insurance Association of America, PCI, estimates the annual shift in medical costs alone in Texas, in the Texas system, to be at least $400 million and likely as much as $600 million. That's just medical. That doesn't evaluate any shift in indemnity. Third, single remedy. Work injury benefits without regard to fault should be the employer's sole liability. But opt-out proponents say their plans provide employer immunity, although this assertion was challenged in the Oklahoma situation. The Oklahoma Supreme Court did not explicitly rule on that issue, but I underscore explicitly rule on that issue. But it will be assuredly challenged in other states that might adopt opt-out. So, is it equitable, let alone constitutional, for opt-out plans to provide a less comprehensive benefit scheme, one that can change from 1 year to the next and from employer to employer? And because alternative coverage plans may vary, will litigation be necessary for workers and employers to find out if their plan qualifies? Another principle, uniform adjudication. Dispute resolution should be provided through a fair, efficient, and expeditious process. State comp programs protect worker rights through a mandatory comprehensive system of state-sponsored adjudication that is uniform as to all employers and employees and protects due process with appeals through the state judicial system. Alternative opt-out approaches explicitly work outside the state work comp adjudication system of adjudication in favor of resolving disputes initially as provided by the alternative plan, that's consistent with ERISA, and subsequently in federal court as provided by the employer. So the question is it fair that some workers should be required to rely on a dispute resolution process established solely by their employer? Are federal courts more suited to adjudicating disputes than the state's workers' comp agency and courts? Broad coverage of injuries, another principle. Coverage of injuries and diseases should be comprehensive with no categorical or anatomical exclusions. Over time, courts and state legislatures have expanded comp coverage for various health conditions determined to be work-related. But opt-out plans are not as comprehensive as work comp and typically exclude coverage for certain injuries and diseases. As a result, opt-out will result in cost shifting to an employer's group health and/or non-occupational disability plan, public programs, and/or the tort system, with employers assuming the liability costs. Furthermore, workers will be subject to differing tests of work causation, depending on whether the injury is covered by workers' comp or an alternative plan. Is that a defensible policy result? PCI's analysis of Texas ERISA welfare benefit opt-out plans showed that these plans do not cover all workplace injuries, with restrictive definitions of accident and injury, that medical benefits may be terminated as little as 156 weeks, even though actuarial analysis shows that fully 1/3 of a claim's aggregated medical expense occurs after 156 weeks. That plan benefits may cease or be modified once the employee is terminated and leaves the employer's employment. The plan exclusions and conditions and limitations are used to force settlements for less than actuarial values. Promotes safety. A work injury comp program should incorporate incentives for workplace safety, and workers' compensation does. Because comp incorporates actuarially sound predictive pricing, predictive of expected losses, as I mentioned before, among different work classifications, injury experience for individual employers within those classifications. In this way, safer employers do not subsidize injury costs generated by less safe employers. State insurance regulation for work comp incorporates an actuarially sound classification system and, of course, the experience rating system, as I mentioned. For employers opting out or not subscribing, there is no experience rating system. Furthermore, if substantial numbers of employers do not participate, work comp insurance rating will lose actuarial credibility for those employers remaining under it. Finally, by not participating, employers with bad workers' compensation claim experience, can dump their bad experience and avoid the financial consequences of a more hazardous workplace. So in Texas, for non-subscribing employers that would be otherwise insured, there is no actuarially determined safety incentive and no financial incentive to maintain a safe workplace. Is that an acceptable policy result? PCI's analysis based on OSHA data concluded that Texas non-subscribers have, quote, poor safety records and account for a disproportionate number of fatalities, suggesting that injury frequency and severity among opt-out employers may be higher than among employers covered by workers' comp. And finally, protecting solvency and benefit security. The comp system exists within an extensive framework of solvency and benefit security protections. Insurance rating laws uniformly prohibit rates that are excessive, inadequate, and unfairly discriminatory. All comp insurance rates are developed through mandatory comprehensive statistical reporting and must be actuarially supported, subject to review of state insurance commissioners. The purpose of this insurance regulatory system is to ensure that workers receive benefits owed and the financial integrity of the insurer is protected. Opt-out plans are not subject to defensible regulation for the protection of financial security. So the question is, will potential losses be actuarially reflected in the product's cost? If an insurer becomes insolvent, insurance guarantee funds in all states, financed by the insurance industry, promise payment to injured workers of the full amounts owed, unlike other insurance lines. In a number of states, self-insured employers participate in their own self-financed guarantee funds. Because ERISA preempts all state laws relating to an employee benefit plan, however, it precludes state enforcement of financial solvency mandates applicable to self-insured employers. Furthermore, because not all employers will opt out, and perhaps relatively few, there's a question whether industry assessments covering the insurance guarantee fund would be sufficient. In view of that uncertainty, will opt-out plans jeopardize the financial security safety net interwoven with the workers' comp system? In Texas, for non-subscribing employers that otherwise would be insured, who or what is guaranteeing work injury compensation costs? So those are 7 key principles and some real, what I think are some serious policy questions that policymakers with open eyes ought to examine the merit of a system like Texas, it's not non-mandatory, or opt-out, and of opt-out plans themselves. And it's like, I feel that policymakers have been almost sleepwalking into an alternative system without really carefully examining, what these key principles are. If these key principles that have guided the state workers' compensation system for over 100 years aren't important anymore, they don't mean anything, we're going to go in a different direction, then let's have that debate and let's make that decision. And we will be in a, we'll be in a different world. But these other costs won't go away. And you can have a plan design that only provides this much in medical coverage, whatever it is, excludes these kinds of injuries, excludes all injuries if they're not reported within 24 hours or 48 hours, as many of these opt-out plans do, even though studies show that only about 20% of injuries are reported within that time frame. If you're going to exclude this vast genre of injuries, those costs are going to go somewhere. They're not just going to go away. They're going to get shifted to other benefit programs, private as well as public. Is that a defensible result? And that's the debate that we ought to be having. So with that, thank you very much.
Thank you very much, Bruce. Really appreciate you making the trip down here, maybe doing a little house shopping.
My wife has fallen in love with Zillow.
Right. Good. Well, if anybody has any questions, please be formulating those, because we'll ask you for those in just a minute. But first, I thought I'd open up the panel and see if y'all had any just comments based on the panelists' discussions or comments. So, anyone?
I do.
Okay. Jennifer, go right ahead.
I have a lot. There was so much material to work with that I'm just going to pick off a couple and then leave it to the audience to have us focus on those other areas that you think are important. What I hear missing in most of the opponents' remarks is a failure to really understand how these programs work and the tort exposure that is there. I don't know. I mean, I'm doing this for 15 years, and I can tell you that I see more encouragement from a safety perspective in this environment than I can even possibly imagine in a guaranteed cost workers' comp system, where the most an employer has at stake is maybe $1,000 deductible on every claim. These employers in this arena are looking at a very real tort exposure to help moderate their behavior. And all of these design issues that opponents are critical of fail to account for this liability exposure. It would make no sense to have unlimited, unfettered benefits guaranteed from an ERISA perspective and have a tort exposure hanging over your head where the potential of a double recovery is there. An employer has to be mindful of the risk that they assume when they opt out in this tort exposure. So, second, the uniformity issue. Every comp system varies. And so if we are striving to achieve uniformity among all of our workers, then we're dangerously close to talking about a proposition that involves federalization, and that's going to keep you from moving to Texas. We don't like federalization. This is a state issue. And so it is fine to have different states decide what's important for the employers in those states. Third, the cost shifting is a hot button. And this 400 to 600 million in alleged cost shifting from these non-subscriber programs works from a premise that if you aren't paying $14,000 a claim in an option program and you're really paying $3,000, that somebody else is paying those other $9,000. And the reality is simply not true. The result is, the concept here is that we're actually receiving a better result. There is no cost shifting. The cost shifting that is occurring, I will say there is some cost shifting. The cost shifting that is occurring are appropriate cost shifting, where pre-existing conditions, degenerative conditions, lifelong ailments are not being paid under these programs. They are appropriately being shifted to the group health environment where as Americans, we should all have coverage. So I'm going to leave it to the rest to bring up those issues that you think that are important, but there's a lot to work with.
Can I respond to that?
Yeah, sure, go ahead,
With all
please.
due respect.
Absolutely.
First of all, with respect to tort exposure, I don't think that it should be a,
Bruce,
I'm sorry. First of all, with respect to tort exposure, I don't think that it's the hallmark, it should be the hallmark of a successful litigation system that the default ought to simply be a tort lawsuit. Good God, we've got enough litigation and enough tort litigation in this country. And so you know, I think that, you know, having the resort to tort is sort of breezily stated. We ought to be avoiding that. The other thing, that's with someone who is non-subscribing. Someone with an ERISA plan, of course, there is no tort suit against the employer because under ERISA, the employees only do what benefits are provided under the policy. There isn't any suing for negligence in state or federal court. So even if one were looking at the tort liability as a positive outcome of this, it doesn't work with if you have with these ERISA opt-out plans. Number two, with respect to conformity, my point about a uniform program was with respect to that particular state. Of course, all states are different. A lot of them have similar features, but of course there are many differences among the states. But within the state of Texas, why should it make a difference if someone is let's say, working at a fast food restaurant who's 25 years old, slips and falls and seriously injures his back, to be treated under the workers' compensation system in one way, if that employer had workers' compensation, but if it opt out, be treated a different way, and not with the full scope of benefits. If that 25-year-old, use my example, if that 25-year-old employee is paralyzed for the rest of his life, where those costs go? Under the workers' compensation system, those costs are picked up by the employer, the insurer, but the employer through premiums, of course, who bought that coverage for that accident year in which that accident occurred. And that employee will receive full medical benefits and wage replacement for the rest of his life. Under an opt-out scenario, they will receive the benefits in accordance with the plan. But as analyses of these plans that have been done, both in Texas and in Oklahoma shows, there are many limitations to these plans. I have no doubt that lots of money can be saved with these opt-out plans. But that isn't ultimately the question here, because that simply relegates workers' comp to a product. It's a better product because it saves money. In a lot of cases, that's true. That's why you buy that product. But there are social costs involved and financial costs involved in not providing the full comprehensive coverage that the comp alternative provides. Those costs will go somewhere. And that employee, in my example, will end up on SSDI and Medicare, 25 years old, and he will qualify for Medicare under the current test if it looks like he will be eligible for Social Security disability within 30 months. So let's say by age 26 or 27, he's on SSDI and he's on Medicare for the rest of his life. And after the plan benefits, if he's covered under an opt-out plan, after those plan benefits expire, those costs are shifted now to taxpayers. And I think that is an inequitable result.
I think the best way to address this is really through real-life example. And thankfully, I've got 15 years' experience of working with these claims and some very catastrophic injuries. First, about 15% of SSDI cases, at the heart of it, is a workers' compensation claim. It's not coming from the non-subscriber industry, it's a workers' compensation claim, about 15%. But to really explain how this tort exposure looks, you have got to look, how these option programs look, you have got to get past looking solely at the benefit plan. So let me put some real life example around this. The worst claim that I ever had was of a 50-year-old man who fell 20 feet from a catwalk. It was horrific. He's a quadriplegic. It was the worst claim I've ever had. This employer had a benefit max of $300,000. Do you think that the employer simply paid $300,000 and walked away? No. What happened was this. All hands on deck. We were looking for the best doctors around the country to treat the man, and we had the tools to do that. We were not hamstrung by rules. We found them. We focused on this gentleman. There was no talk of cutting off benefits at $300,000. What the employer did was create a supplemental benefit plan, which you can do under ERISA, to address the unique needs of this individual. We did that. The intent was that, oh, there's going to be representation. We're going to settle this. This man needs to be cared for. We bridged the gap with a supplemental benefit plan, paying close to about $2 million to get to the point where we knew what his needs were going to be. Now, we went to the carrier. We had a great offer in hand. It took into account what his lifetime medical needs were, the modifications that were needed to his house, the van, the home health support that he was going to need, and came up with a package that we were prepared to present to him that was over $5 million. Now, that was first offer. There was going to be some negotiation, clearly. The gentleman engaged a plaintiff attorney to help him. Over the next, 8 months, this matter was resolved with this man having enough money in his pocket to actually decide how he wants to be treated, to choose his own doctors, to not be in the system, to have his family care for him. So to say that we are cutting off benefits at an arbitrary amount does not do these programs justice for the holistic approach that the employer is taking when having a catastrophic event. There are tools beyond what's simply in the ERISA benefit plan, and we're not having to litigate every matter. These are employers and employees that are working together to figure out what makes the most sense with them, with the comfort of knowing that a plaintiff attorney is there to guide if they feel like they need it.
But there isn't any statutory mandate that you
And it's not needed because in this case, both parties are happy. His family is happy. It's a devastating, life-changing event. But his family has absolutely no complaints. I've talked to him. I mean, I've got firsthand knowledge of how these programs actually work. And what the opponents fail to see is really practically how these plans, how these difficult claims are resolved. You don't see these confidential settlements because by their nature they're confidential settlements, but they're occurring and the employees are being well cared for.
If I could, we're almost out of time, and I just want to see if there are any questions from the audience before we quit and knock down. Yes, sir. Go right ahead.
My name is Don Bennett, and I'm a small business owner. I'm wondering, are there certain industries or businesses that are precluded or not available to opt out? For instance, my business is mostly focused in oil and gas services, and we have safety consortiums that we have to report to, like ISN Networld, and my understanding is they do require us to be in the workers' comp program, and I'm just wondering if I'm missing something there.
You go ahead.
There are some industries, if you have government contracts, the state of Texas requires that you have workers' comp. And we've come across some clients that have contracts in place that use what we dub as more of a universal term for having some sort of coverage. We talk to them about, well, this is what we have in place and you're able to do it. But most important in that type of industry is with the tort exposure, is making sure that there's an insurance carrier that would be willing to provide some sort of coverage for the tort exposure, the very real tort exposure that is there. So that, to me, I don't think that there would be anything statutorily that would prevent it. There may be some contracts that you would have to look at, as well as give big consideration of, can we find a carrier to insure the tort exposure?
And if I can, one more question. I want to try and drag Commissioner Brandon into this a little bit. You mentioned you travel around a lot of the country talking about the Texas system. When you go out there and talk to these other states about the Texas system, are they interested mainly in just the workers' compensation system, or are they also asking about what's going on with non-subscription?
That's a good question, and the answer is both. I think a lot of the regulators from around the country are trying to figure out how to replicate some of the results that we've seen in Texas with the reforms that we've had inside of our workers' compensation system. But there is also a group, I think, Ms. Hurlis's group and several others that are also looking at this opt-out voluntary nature of the Texas system and implementing that in other states. Oklahoma was the, first state that did a form of voluntary workers' compensation. Had a law that put in place, although it was different than Texas, and that's a very important distinction. In Texas, you don't have to have anything. You could be bare. You have to literally decide to opt in to either an ERISA plan or opt in to having workers' compensation coverage or opt in to having some kind of coverage other than just going bare and opening yourself up to tort liability. Whereas the law that was passed in Oklahoma basically said that everybody starts as having to have workers' compensation coverage, and you have to basically apply to the Workers' Compensation Commission in Oklahoma in order to qualify to opt out into having a private plan that still guarantees the same benefit structure as the workers' compensation system in Oklahoma. So they're two very different systems with the same concept of not having to require workers' compensation coverage. The Supreme Court in Oklahoma has decided that the way that they set up their system was unconstitutional, and so now they're back to having mandatory workers' compensation in Oklahoma. But presumably that debate's not over. But that's outside of my jurisdiction, though, so I don't really know. But I do know that the same proponents are looking at Tennessee and several other states.
All right. Well, we are out of time. Thank you all for coming here today. We've got lots of other things going on that are enjoyable, and please join me one more time in thanking our panelists.